Thank you, and thanks to all for joining us today. We're thrilled about being able to talk about our strategies paper today, and I want to just briefly introduce Dave Sapenaro. He, of course, has been working with us very actively throughout the last couple of years, leading an internal senior leadership group, shepherding us through our strategy development, our consultation paper, and now finally this strategies paper that we issued a couple of weeks ago. So Dave is also now being asked to lead, and we're all lining up behind him to lead the Federal Reserve's efforts to start to work on the action items in that strategies paper. We're thrilled to have him continuing in that role, and I'm going to turn it over to him, and he's going to start us off with our presentation today. Thanks, Dave.
Yeah, Sean, thank you, and welcome everyone to the call today. I'm going to cover the first several slides in the slide deck and start off on slide 3 by giving you some context for the paper, and then we'll get into the specifics of the paper here in a little bit. But as is described on slide 3, back in late 2012, we updated our strategic direction for payments and focused in on improving 3 facets of the payment system: security, speed, and efficiency. And we also noted in our revised strategic plan that we were going to pursue this strategic direction through both our operator role as a provider of payment services and also in our so-called leader catalyst role, where we work with payment stakeholders to improve the payment system outside of our operator role. We also noted in the plan that we were going to take a broader focus on the payment system, and by that I mean not looking just at the interbank space, but also look at the payment initiation part of the system as well as the payment receipt part of the system. And this direction really was really 2 changes from previous plans. First, our historical focus has been on the interbank space. So this is the first time we've really focused in on the front and back ends of the payment cycle. And that's a pretty big change for us. Secondly, we envisioned being a stronger leader catalyst as we executed on the plan. So some of you may have attended various briefings like this one back in 2012 where we were talking about our new strategic plan. And if you did, you would have heard us talk about, in terms of speed, that we were going to look for opportunities to improve the speed of our own payments, particularly moving from paper to electronic. And we were also going to, in our leader catalyst role, better understand the market demand for faster payments. You would have heard us say back then that from a security perspective, even as we were continuing to focus on improving the security of our payment systems, we were going to spend a lot of time working with payment stakeholders to understand end-to-end security issues in ways that we could help address gaps and improvement opportunities. And if you would have listened back then, you would have heard us talk about efficiency and ways that we were going to help improve payment system efficiency through our operator role, but again also in our leader catalyst role through things like promoting standards adoption and understanding barriers to improving the efficiency of the payment system. So that was back in 2012. If you move to slide 4, you would have seen on this road what I just described is really the first point on this journey where it says new end-to-end strategic focus on speed, security, and efficiency. So over the last 18 to 24 months, we've embarked on a large number of research and outreach efforts, all of which are detailed here on this slide, to help us better understand how we can improve payment system security, speed, and efficiency. Notably there, you'll see the consultation paper, which we released in the fall of 2013, where we solicited comments on gaps and opportunities that we saw in the payment system, as well as on some potential desired outcomes, strategies, and tactics that we were thinking about pursuing to help address those desired outcomes. So we received over 200 responses to the public consultation paper from a very diverse audience, lots of different payment stakeholders, and those responses indicated strong support for the desired outcomes that were included in that consultation paper, and that also there was strong support for the Fed playing, this leader catalyst role to help encourage and nudge the payment system to help achieve these improvements. Not surprisingly, in that feedback, while the desired outcomes were strongly supported, there were various ideas about specific strategies and tactics, so there was less consensus and common ground there. So if you move to slide 5, this brings us to today, which Sean mentioned. We published our strategies for improving the U.S. payment system paper on January 26th, and that paper is the culmination of all of the work and all of the outreach that I've talked about heretofore. So in a nutshell, this paper communicates our recommendations for improving the payment system, both through the lens of us being an operator as well as through the lens of us being a leader catalyst. And by publishing this paper, we're doing several things. First, we're formally communicating our desired goals or outcomes for an improved payment system. Secondly, we're delineating our multi-year strategies that we will pursue, working with payment stakeholders to try to support those desired outcomes. And third, we're soliciting broad stakeholder engagement and commitment to help pursue these desired outcomes and strategies. So on slide 6, we summarize the 5 desired outcomes, and for those of you that have read the paper, you know that they're summarized in detail or explained in detail in the paper. But let me just briefly touch on them. So our first desired outcome relates to speed of the payment system. Right now, there really is no ubiquitous or convenient or cost-effective way for U.S. consumers and end users to make real-time payments from any bank account to any other bank account. And we believe this capability would be very helpful for certain types of payments. And so, thus, we have identified this as one of our key desired outcomes. Secondly, I probably don't even need to talk about this second desired outcome related to security, because if you're involved at all in the payments ecosystem, you know how important payment security is and will continue to be. You all know there are just many, many challenges, security challenges in the payment system, both because of more sophisticated threats, but also because there are just more options for how end users can originate payments, both through different devices and in terms of just, from being mobile and things like that. So security is going to continue to be a very important issue for the payment system, and it's no accident that our first two desired outcomes are both speed and security, because in many ways you have to address them together to improve the payment system. Our third desired outcome relates to efficiency. I think this is pretty self-explanatory. Despite the growing use of various types of electronic payments, the country still has persistent check usage. Last count, over 18 billion checks are still being written, so there are still opportunities to improve on that dimension. There are also challenges in moving the unbanked population to electronic payments to give them better access and better prices for various types of payment instruments. And so that continues to be a strong emphasis by the Federal Reserve. Our fourth desired outcome relates to international payments. globalization, as you all know, continues to accelerate, and there's just a growing need for cross-border payments that are fast and convenient and accessible. And right now, typically, consumers and end users trying to effect cross-border payments incur much higher transaction fees and longer processing times than domestic payments. And while there are several innovators in this space, the Fed believes there are just improvements that need to be made in this area. And then finally, our fifth desired outcome relates to collaboration. The U.S. payment system is very complex, involving thousands of financial institutions and merchants of all sizes, hundreds of non-bank service providers, emerging payment organizations, and this market makes coordination very challenging, and therefore it makes broad adoption very difficult to obtain. So we believe that the payments system is best served by a certain amount of collaboration among payments providers to improve the payment system, even as we maintain a sense of competitiveness and innovation that drives things forward. So those are the 5 desired outcomes in a nutshell. And I'd now like to turn the floor over to Sean, and he'll talk about the strategies that are included in the paper.
Hey, thanks, Dave, and thanks for the overview and kind of the context of how we've been operating here. But on slide 7, this is by way of introduction on these strategies. I think one of our goals in all of the industry outreach and collaboration that Dave talked about relative to the strategy, the consultation paper, all the forums we have been engaging in the last 18 months or so, the objective really was to come up with strategies that really people can rally around in the payment ecosystem that Dave referenced. So we also hope that in publishing these strategies, these desired outcomes, that most stakeholders, all of you on the phone today and others, would not be surprised by any of these strategies or desired outcomes, and that you all had an opportunity to help us think through all of this. So if we achieve those 2 objectives, we'll be really excited to hear that feedback. And thus far, we have heard a lot of that feedback. So let me dig into the strategies themselves, of which there are 5. On to page 8, I want to talk about the first one, which I was alluding to, that being this stakeholder engagement. We're very, very committed, as I think we've tried to make clear, and through all the actions and activity over the last couple years, are very interested in bringing along all payment system stakeholders that have an interest and are devoting time to payment system improvements in what I like to refer to kind of in a proactive way, to think about our payment system in the U.S. and how can we not only improve what we have, but think about the future and start to work on initiatives that will certainly position the U.S. marketplace in a very competitive way, in a very effective way, and secure and reliable and all of that. So the ecosystem continues to evolve, but we want to evolve as well and not be sitting on our hands trying to or waiting for something else to dictate terms. So we're really excited about trying to help catalyze the conversation, the dialogue around payment system improvements. And the way that's happening for us, and we think is going to be most successful in this country, is through a lot of open dialogue with broad industry stakeholder perspectives to divine a way forward. And we hope that this paper that we published does, in fact, reflect that. On page 9, we talk about how you can stay connected to what we're doing through all of the work efforts that have currently been acting on, as well as what we plan in the future. We want you to become a part of our Fed Payments Improvement conversation through our fedpaymentsimprovement.org website. Please sign up if you have not already. I presume most folks on this phone have done that, given that you're participating in this webinar. But hope you will join us. That will be kind of our home base for all of the information as it becomes available, given our efforts here. On page 10, we talk about two specific industry engagement activities that are listed in the paper. Talk about these in a little more detail and under the other strategies, but certainly we're going to kick off a faster payments task force and a payment security task force to help dig into those issues more thoroughly and at a more deep level to try to better understand what impact we can make there and what direction we can hopefully bring the U.S. payment system to some sort of common ground for actions associated with both of those key initiatives in the U.S. So that'll be centerpiece work efforts that we will be teeing up here in the coming weeks with information on those two task forces to begin work. On page 11, I want to talk a little bit further about strategy 2, which is the faster payment strategy. Obviously, we're very interested in continuing that dialogue with the industry. On page 12, we talk a bit about this task force again. We're working on feverishly, actually, how we're going to stand up these task forces, how we would compose them, how we would try to set up a work plan for the task force to drive to effective approaches to faster payments capabilities in the United States. So all of that work's in train right now. We're excited about getting that started as soon as we possibly can. We're working through some of that detail, and that will be forthcoming in the coming weeks. That I'll just say on the faster payments task force that I know there's a lot of expressed interest already from a number of stakeholders. I've heard from many and others in the Fed as well, and we're eager to get information out to you as soon as possible. So stay tuned for that, and we're looking forward to the ongoing dialogue with faster payments capabilities. On page 13, I'm zooming through these slides a little quickly because I want to make sure we have plenty of time for our Q&A, which I think always is very beneficial for all. So pardon me if I get to speed talking here with all of you. On page 13, the payment security slide there, we're talking about what we're attempting to do. Dave, I think, captured it correctly in terms of our industry dialogue over the last couple of years. It's faster and it's security. And it's never one of those before the other. It's always kind of a close match in terms of people's priority. I think the faster payments issue is kind of the new idea on the table that people are very excited to talk about, but certainly the security issue is one that continues to be top of mind for all payment system participants. So we think that merits also this, on page 14, a security task force that we intend to stand up that can hopefully not duplicate work that's already in train. As many of you know, there's a lot of work being done on security issues and payment security issues in particular. We do not aim to duplicate work here. We're looking to fill some gaps and opportunities relative to the security landscape that we have observed. And hopefully this task force will help us identify some of those gaps and opportunities as we think about payment system security more broadly. On page 15, we're going to continue efforts along the notion of payment system security, working on, and I'll touch on this on strategy 5 as well, working on looking through what we could do from a financial services perspective in terms of fraud and risk management services we could provide, things that we can do to enhance safety and security and resiliency of the payment system. That will continue to be an area of focus for the Federal Reserve in our role that we play in the payment system. On page 16, we'll also, as part of our payment security landscape study that Dave referenced in our roadmap earlier with the nice road depiction there, we did a payment security landscape study and identified a couple of things that the industry told us might be useful, that being able to report more broadly fraud data and also to employ some of the Federal Reserve capabilities relative to research on security issues that are happening in the U.S. and abroad, we think we can add some value there in some of our capabilities. So we'll continue to press on with some of those initiatives from a Fed perspective. Moving on to Strategy 4, page 17, this is kind of the end-to-end payment efficiency objective where we're trying to do all possible to, we're always about trying to get more efficient in no matter what we do in the U.S., and certainly the payment system is no different. On page 18, we talk a little bit about the ISO 20022 standard that we're doing some work on. Many of you know that last year we teed up an effort, Dave might have referenced this in his roadmap discussion, about the work we did with a consultant in partnership with NACHA, the Clearinghouse, and the X9 committee to look at the ISO 20020 issue, kind of a business case assessment of what it would take the U.S. to move in that direction. As many of you know, most if not all countries outside the four walls of the U.S. economy either have implemented this standard for their payment systems or have a roadmap to do so. So we, of course, think this is going to be important for us in the U.S. From a long-term competitive perspective to ensure that we don't fall behind in this regard. So what we have determined through that study, however, that is that the U.S. payment system participants, many are very versed in this topic, many are not. And so we think that a logical first step is to do a number of planning and education forums and activities to get folks up to speed on what this thing called ISO 20022 is, and then start to explore the possibilities and opportunities with cross-border payments and, of course, domestic payments in this roadmap to dealing with the ISO 20022 issues. So lots of work will be teed up there to kind of position our marketplace to make some decisions about what to do with the ISO 20022 format in the coming years. On page 19, we talk a bit about these payment directories. Obviously, there's a number of payment directories in the U.S. that we think there would be some benefit to us thinking about, and there's a number of work efforts underway, thinking about how to connect some of those directories perhaps where there's some interoperability opportunities there. We want to continue to push for dialogue and discussion about those directory capabilities and see what we can do to continue to foster this notion of ubiquity amongst some of those networks and security and the like. So that will continue to be a focus for us in this efficiency strategy. On page 20, we also reference in our paper the electronic business-to-business payment space. As many of you know and painfully aware, the business-to-business space relative to payments is very, very wed. Many businesses wed to either the paper check and now the electronic check process, which results in an awful lot of manual intervention all the way along the way. And we think we're making some progress with certain work efforts to help with toolkits and the like to try to help electronify a lot of those processes. But there's a lot of work to be done there, and I think a lot of opportunity to become more efficient relative to some of the B2B payment activities that occur in the U.S. So we'll continue our efforts in that regard. On page 21, Strategy 5, this is the strategy as it relates to Federal Reserve financial services. Many of you on the phone, perhaps from a financial institution, perhaps avail yourselves of the financial services the Federal Reserve provides, whether it's wire, ACH, or check services. We believe that there are a number of opportunities with those services that they need to be enhanced or could be enhanced to better the payment system operation in the country. On page 22, we talk about this National Net Settlement Service. I think most of you know that I think it was late last month, early this month, we just announced a extension of the hours for the National Net Settlement Service, which kind of can underpin a exchange network with central bank money and final funds, and we hope this service over time can continue to provide that kind of capability. We have a roadmap listed out in our paper about kind of our thinking about how to expand those hours in the coming year and then in years beyond, with the idea that eventually that capability could be made to be a 24/7 capability that the industry could leverage. So page 23, we also talk a little bit in the paper about how we perhaps improve our current check rails in terms of enabling clearing and settlement of both forward and return items on a same-day basis. We'll continue to do all necessary there. Many of the commenters on our consultation paper suggested that a lot of the efficiencies in the check system have already been wrung out, that we shouldn't spend a lot of time and energy focusing on check system improvements, but we believe, and I think a lot of industry stakeholders believe, there's still opportunities there, and we aim to continue the momentum there and do all possible to make that more efficient. Page 24, the same-day ACH settlement idea. Many of you know that NACHA's, I think, just wrapping up their request for comment period on their new proposal that they've put forth to effectively have a mandatory same-day ACH capability that all originators and receivers would have to sign up for. So that process is underway. We support, as many of you know, we already provide, the Federal Reserve that is, a same-day ACH capability that's opt-in, so it's non-mandatory, but we are all about trying to help the payment system become better, more efficient, more effective. We think, like NACHA and many others, that there are a number of use cases that would benefit from a same-day ACH capability, and believe there's some merit to proceeding with that capability. On page 25, we talk about the Fed Global services that the Federal Reserve currently provides. As many of you know, we have a ACH service that reaches about 35 countries or so today. We're exploring the opportunity of expanding that. We're also exploring the possibility of implementing a FedWire funds service for international wires as well, but both of those efforts are in the exploratory phase and evaluating opportunities there. But clearly, I think all the feedback we've received and what we know about the international payment space is that it's not very timely, it's costly, it's not very transparent. That is, options to interact and transact business cross-border. We think there's lots of opportunity for improvements there, and we'll continue to explore those capabilities for improvements. On page 26, I kind of alluded to this earlier relative to these risk services for ACH check and wire. We have a number of services that are currently provided along those lines, and we will continue to explore opportunities for enhancements of those capabilities for people that use our services. Page 27, I also alluded to this a bit on payment directories, the interoperability of same, that we think there are some opportunities to connect some of these networks that exist today, even within just financial institutions and some of the services we provide, for example. So that will continue to be an area of focus for us on the financial services side to try to enhance our abilities and interoperability with directory capabilities. So on to page 28. This is kind of the punchline. That's the take action line, and if you read the paper, I'm sure most of you have. We're at a point now, there's been a lot of research done, a lot of industry engagement, hopefully not many, if any, surprises in the paper that you've read now, given all of the dialogue. Now it's time for action. In our opinion, we are not going to accomplish some of these objectives, desired outcomes, or strategies without full participation of industry stakeholders in this country, and we are looking for your participation on these task forces once we stand those up. We do not anticipate at this point, I'll tell you this much, that we would limit the participation in those necessarily because we want broad insight and participation there. But we're looking for help on the task forces and the work groups that would be established under that task force. So that's a key area for participation. We also, like the last couple of years or so, where we've had roundtables and town hall sessions and the like, lots of opportunities for feedback that we really would like to have many industry participants join us for those to provide insights and helpful guidance and direction for some of these efforts. So stay tuned for those opportunities. We'll look for your participation there as well. And then finally, and very importantly, none of these payment system opportunities are reliant only on the Federal Reserve's activities here. Certainly we're going to do all we can to help lead and catalyze the conversation and participate in whatever way would be useful and productive. But there's a lot of industry activity already in train or deployed in this country and around the world that we can learn from and leverage. And so we're going to continue to support and obviously encourage that kind of development activity in trying to improve our payment system as we go forward. So in summary, on page 29, or conclude rather, I'd just like to again reiterate there's lots of different ways to connect with us on all these activities. You have a number of opportunities through our fedpaymentsimprovement.org. We'd love to have you sign up for that. We've also stood up some social media with Twitter, YouTube, and LinkedIn. Those are listed on that slide. We'd love for you to continue to participate with us that way, and we hope to keep you updated with all of the great activity that's being worked on. So I've gone as quickly as I could on this, Eric. I hope that came across okay, and I'm going to conclude my remarks and pitch it back to you so we can get into the meat of the matter with some of these questions.
Sean, thank you. That'd be great. So this is Eric again. We're going to jump into some Q&A here. A couple things before I start. At the top of the call, I said fedpayments.org. It should be fedpaymentsimprovement.org. You'll see that on slide 28, and Sean just talked about that. So my apologies for the wrong URL earlier, but that's the right one. And I just want to note, any questions that we get today that we're not able to answer, we will follow up with the questioner afterwards. So we're going to try to get through as many questions as we can. But please understand, if we don't get to your question, we'll follow up afterwards. So let's jump in. So first question, Dave, this is for you. The question is, the paper states that the Fed would not consider expanding its service provider role unless it determines that doing so is necessary to bring about significant improvement to the payment system. And the actions of the private sector alone will likely not achieve the desired outcomes for speed, efficiency, and safety in a timely manner. So can the Fed achieve the desired outcomes without an operational role? So that's a great question, and we have received some form of this question several times in the 2 weeks since we released the paper. And I'll make several points here. First, if you go back really decades, the Fed has a long history of successful collaboration with the private sector to improve the payment system. And so in the so-called leader catalyst role, we've actually been performing in that role for quite some time. Now, it's true that most of our work in this role in the past has focused on payment systems that we operate, check, ACH, FedWire, and so we were simultaneously being an operator and trying to be a leader catalyst for those particular payment systems. So as is noted in the question, us trying to be a leader catalyst in possibly a faster payment system where we don't plan on being an operator, that is new ground for us. But we think that we can be successful in working with the payment system stakeholders through collaboration to achieve the goal of speeding up retail payments. We acknowledge a very ambitious and challenging endeavor, but the support that we've heard and seen so far, both before we released the paper and after, suggests that we can play this role, it can be successful, and that we can help the country move to faster payments without us necessarily having to be an operator. And I guess my final point on this would be that if we find out after working on this for a while that it's just not happening, then we always reserve the right to go back and look at our operator role and see if we do need to play that card. Of course, we would be looking at that through the long-standing principles we've developed that we apply to ourselves anytime we think about expanding that role.
Next question, Sean, this one's going to be for you. So the strategy paper recognizes the need in the U.S. for hundreds, if not thousands, of financial entities to collaborate. Short of some sort of enforcement or compliance laws, what do you think can be done to convince the largest firms that collaboration is best for everyone?
Oh, so I get the easy questions, huh? Thanks for that question, Eric, and whoever submitted it. Clearly, and Dave mentioned this, that this isn't going to be easy. To tell you the truth, over the last year or so, there's been a sea change in my mind in the payment industry in the U.S. where we were all asking the question whether or not, for example, faster payments capabilities are even needed in the United States. And I think that sea change, after all the dialogue and discourse and research and all of that, we've gotten to the point in this country where people are no longer asking that question. They're asking the question, what should it be and how fast can we get to a faster capability? So I think it's proof positive that through industry dialogue and meaningful research and informative research, perhaps the issue can be carried through a collaborative process that we've been engaged with. And that's not a Federal Reserve kudo, that's a kudo to the industry to be intellectualizing the possibilities and prospects for our future. So we think that there's a lot of activity when you think about faster capabilities. A number of very large organizations, the Clearinghouse, many of you know, is already made a commitment to build a real-time capability. You have the wild success of PayPal and the work that they've done with tens of millions of customers that use their quote-unquote real-time payments capability. Fiserv with their recently announced Network for the World Now capability. There's a lot of activity going on with very large organizations that are seeing the opportunity here, and we believe we can help harness some of that enthusiasm and momentum to think a little broadly, more broadly beyond perhaps these closed networks that have proliferated over the years to something that can be more ubiquitous, more far-reaching, safer, of course, and faster. So we're very optimistic that we can get that momentum heading in the right direction, recognizing that there are challenges with the number of participants that will want to weigh in and the business propositions and the like that are on the table. So it's ambitious, but we believe we have a way forward here, and we're going to continue to press the dialogue.
Thanks, Sean. So next question is for Dave. This is a security question. So the question reads, in light of the recent Anthem breach, in addition to the multitude of other data breaches, would you agree that the Fed can and should be charged with data security above all other stated strategies? Is this not a matter of safety and soundness?
So, another great question. I would note that the Fed has always placed security as a top priority to protect the safety and soundness of the U.S.'s financial systems, generally speaking, and consumer information, particularly. And I'm saying that as a Federal or is there a financial services person that works on that particular side of the Fed? But I also think it's fair to say that I could say that if I were on the regulatory side of the Fed as well. So both sides of the Fed have long had this as a top priority. And I mean, there's just no question that data breaches are a serious concern for not only the payments industry, but for industry in general, and a significant amount of time and attention is being placed on this issue by many firms, and maybe even all firms. And as we have talked about payment security over the last 18 months with numerous payment stakeholders, this particular issue in payment security does get a lot of attention, and most solutions that are suggested, at least I've been told to us, focus on masking data or eliminating altogether account data or the transaction data. And so these are exactly the kinds of things that we look forward to exploring with our new payment security task force. Again, not to duplicate efforts that are already underway in industry in general, but to see where there may be gaps in that work, or where we can help support efforts that are currently going on, to help them be completed effectively and successfully.
Thank you. Okay, another question. Sean, this one's for you. So the strategies document mentioned being engaged on a task force, and in fact, I think you even mentioned this. This person's saying, I'm unable to locate the sign-up on fedpaymentsimprovement.org. Is the sign-up available yet?
Well, it's good that they're unable to find it because it's not there. As I mentioned in my earlier comments and reviewing the strategies, we're working feverishly on how to stand these task forces up with all of the procedures and details for how to sign up and how we're going to constitute these dudes. So stay tuned, and as soon as that information becomes available, we will use all social media means as well as our website and email distributions and the like to make sure it gets widely known what the procedure is going to be. So all I have to say to that is stay tuned.
Okay, Sean, we're going to come back to you for this next question. I like this question. This is interesting. So this is, I'm going to read this. One of the final desired outcomes in the Fed paper is, I quote, a ubiquitous, safe, faster electronic solution with finality, end quote. In his November speech to the Clearinghouse, the CFPB Director Cordray said, the goal should be faster payments, not faster unfixable errors, and certainly not faster unrecoverable theft from people's accounts. So the question is, what is the Fed's perspective on how the industry can successfully work through two seemingly conflicting and significant expectations, finality versus revocability? Wow, that's a tough word.
Okay, I'm just trying to take a guess as to who of my industry colleagues provided this question. But I think this is a really, really valid concern. The balance here is going to be critical on this particular issue in particular. As we work through that faster payment assessment with our consultant last year with many industry inputs to that process, this was one of the issues that the revocability issue was one of the key issues that was kind of left on the table for resolution. So I think and hope that the task force work as well as some independent work that's happening with other organizations, I've mentioned a few of those earlier, we're going to wrestle that issue down to the ground and come up with some common ground, again, that will make some sense for the consumer, make sense for the service provider or the financial institution involved in the transaction, so we can have a capability that really is user-friendly but also safe, secure, and provides for functionality that won't paint us in a corner on an issue like this.
Great, thank you. Next question is for Dave here. So is RealTime ACH something that is being considered, similar to the NICE payment network?
So the current focus of the same-day ACH proposal is same day, not real-time ACH. Having said that, we are still very supportive of this particular evolution to the ACH network because it does support our faster payments desired outcome. And there are some payment use cases that would benefit from faster ACH. They don't necessarily need real-time or near real-time, but they could benefit from faster than overnight, which is what ACH can do. So we think the ability to offer this same-day ACH service, and I think the way it's being envisioned is 2 different settlement cycles, 10 to 12 in the morning and then 3 to 5 in the afternoon. The ability to have that payment system in place in this country would provide a lot of benefits, and we are very supportive of the concept of moving to a same-day ACH infrastructure.
Next question is going to be for Sean here. So why is the proposed time frame so long when banks already have real-time transfer systems in place? Is that number based on a genuine assessment of impediments to achieving these goals?
Well, as you say that, I'm hearkening back to, I think a lot of questions I've received and others have received about this time frame being too long. And I think the root of it is when we did our consultation paper back in 2013, we laid out or suggested a 10-year time frame for these improvements, all of them, whether it's faster, security, whatever. And people reacted very viscerally to that to say, whoa, that is way too long. And I think what I want to make very clear is the Federal Reserve heard that feedback, and when we published this paper we issued a couple of weeks ago, we eliminated any reference to a 10-year time frame. And so the idea was we heard the industry say it's too long to think about 10 years. We should and could get about some of these payment system improvements sooner than later. And so we heard that feedback and are indeed with the paper as we've lined out some of the key dates, for example, with the FASTER initiative. We want some key answers to some of that. We're going to stand up these task forces, both security and FASTER, but in the FASTER capability, for example, we want to complete that work in 2016. So we try to be really responsive to that. We think there are, indeed, to kind of the second part of that question, some of the impediments to getting to some of these payment system improvements. We're a country with a very, as Dave mentioned earlier, complex ecosystem with a lot of financial institutions, a lot of payment providers, and network providers, et cetera. And to come up with an approach on any of these issues that's comprehensive and, in the end, critically adopted, we think the approach of collaboration and making sure we hear all sides of arguments and suggestions to divine a way forward that, in the end, does get adopted and will be successful for the country. So I want to dispel the 10-year horizon and say we're very, very eager and have a sense of urgency about all of this work and believe that many stakeholders share that view, and I think we're on the same page there.
Okay, so I'm going to put a challenge to you and Dave to see if we can get through the last few questions here before the top of the hour. That might be hard, but let's try it. So, Dave, this question's for you. Does the Federal Reserve intend to collaborate further with the Clearinghouse as well as NACHA?
Well, the short answer is absolutely, but let me expand a little bit on that. So we're very pleased to see the Clearinghouse and NACHA work to improve the end-to-end speed of payments. That obviously supports our faster payments desired outcome. We have worked with the Clearinghouse up to this point, hope to continue to do so as they continue their work efforts. We have issued a couple of comment letters back to NACHA just Friday on their proposal. We are broadly supportive, have a few issues we've pointed out to them that we'd like to further discuss with them, but we're very broadly supportive of moving to same-day ACH. So we hope that Clearinghouse and NACHA and really other providers that are already working on various things participate with us on our task forces and work with us in other ways. I don't think it's mutually exclusive that private sector providers work on their own payment system improvements, but also work with us and in collaboration with other stakeholders to move the ball forward. I think they can. Hopefully, they agree they can do both. So we hope that that's the case.
Excellent. All right, Sean. Question for you. You keep referencing this mysterious consultant. Who is the consultant, and will some of their findings be available? Sean, you with us?
I'm sorry, I was talking on mute. I presume you're talking about the faster payments consultant? Is that the question?
It doesn't say, Sean, but I think that's probably right.
Yeah, okay. So the consultant was McKinsey & Company for the faster assessment, and for the ISO 20022 assessment we did, that was KPMG. So they obviously were very helpful and useful in the work we've done, and we're evaluating, will evaluate with those task forces the use or non-use of consultants going forward.
Okay, great. Let's keep with you, Sean. Next question. How will faster payments benefit billing organizations?
I got a real life personal story in that regard, and maybe many of you on the phone have been there, but when you get behind on your payments, or the mail system we have for paying your telephone bill or your rent bill or whatever, we think that having this real-time capability to go do a same-day payment rather than having to go to a location of your local utility company or phone company, being able to do that same-day real-time on day the payments due would certainly benefit many consumers and me personally from time to time.
Excellent. Okay, next question. Dave, this is coming to you. This is about token standardization. So the question is, one of our participants describes the importance of a standardization to support token solution and asks if the Fed is working on a token standardization.
Well, I'll refer back to our Payment Security Task Force and the work that we expect that task force to do. And this is exactly another, well, I think it's another example, we had one earlier, of the kind of specific issue we would hope the task force would put on their list of key things to think through and to talk about and develop some recommendations for the payments industry to adopt. So that's kind of my answer number one. My answer number two on this is more specific, and we have done some work in this space. We have a mobile payments industry work group in the Fed that's managed by the Fed in Boston and Atlanta, and that group works with various payment stakeholders to talk about all things mobile payments. And they have convened discussions on tokenization and the landscape in the U.S., and so there is some information on our website, fedpaymentsimprovement.org, for the questioner that was interested in the details.
Thank you. Dave, we're going to stay with you. So how are financial transactions going to be verified that they are real and are not fraudulent?
So I mentioned in an earlier question how important payment security is, and obviously banks and all payment service providers are very focused on payment security and emphasize that even as we move to faster payments, we have to ensure that the security, authenticity, and the confidentiality of those payments is appropriate. And so we would ask our payments task force to look into this particular issue as well. I would note that if you just look at experience in other countries that have implemented faster payments, they have used a variety of controls that would fall into the categories of strong authentication, real-time monitoring. Some have dollar limits, transaction dollar limits. A big one is credit-only payments, and then settlements, interbank settlement throughout the day as opposed to just the end of the day. So all those are kinds of things that we would want both the faster payment and the payment security task force to be looking at.
Okay, Sean, a question for you. This is about paper checks. The question is, the current interbank check system is all electronic. What plans does the Fed have to address the only remaining paper process, the front-end check writing and delivery process?
I think, as I maybe alluded to earlier in the slides, we do, in fact, believe there's still some opportunities for enhancements to the check process. I talked about same-day clearing of return and forward items, talked about potential risk services for the check items that still exist, whether electronic or paper. So all those are on the table for continued dialogue and work to improve that capability.
Hey, Sean, this is Dave. I also would mention on that question as well that in addition to continuing to improve the check collection process from end to end, one way of improving efficiency is to eliminate the check altogether, and if you can provide electronic payment alternatives to the payment initiators, where you don't have to have the account information of the receiver, you have a P2P payment or even a P2B payment, then that kind of takes the whole check writing process out of the equation.
Yep, good point.
Okay, we have 2 questions left. We're going to get through these. Sean, question for you. How does the U.S. payment system compare operationally and in efficiency with those established in other countries?
Well, I'm certainly not equipped to provide that analysis in 2 minutes, but certainly a lot of the innovation and change that's happened in other countries, when we did our faster payments assessment, for example, we did a global scan to see what was happening around the world in that regard. Many of those countries were implementing a faster capability because their current payment system wasn't working very well. But our country, being the largest economy in the world, pushing around $15 trillion worth of GDP every year, we have a payment system that does, in fact, work pretty well to do that. But there are, as we've pointed out in all of the research that we've done with consultants and all of the industry folks that participated in all that, some gaps and some opportunities in that regard. So again, it's kind of, let's think about our payment system today and into the future. What can we proactively tee up to get it ahead of the curve on certain things and to improve what we have today? So that's what our effort's all about.
Okay, thank you. Final question. So, Dave, what is the timeline for the implementation, and is there a project plan?
So I would answer this question by saying that if you actually look at the strategies and tactics that were included in the paper, you're going to see action all the way from in the very near term. For example, we're going to, on the Fed side, in terms of our operator role, we're going to be making some changes to our net settlement service. We're expanding some hours. So you're going to see some of those improvements pretty quickly. On the other end, something like a faster payment system, faster payments in general are going to take a little longer to get done, 3-4 years. I think the NACHA proposal was to fully implement by 2018. If there's a similar work effort to speed up or implement some kind of near real-time system, you could be talking 3 to 5 years between now and fully getting it implemented. So you're going to see a number of things happen, between now and the next 3 to 5 years. That's how I would answer the question. And we are specifically developing project plans and things to kind of push the ball forward on all of the different strategies and tactics that are included in the paper.
So the first question says this: the paper states that the Federal Reserve would not consider expanding its service provider role unless it determines that doing so is necessary to bring about significant improvement to the payment system, and the actions of the private sector alone will likely not achieve the desired outcomes for speed, efficiency, and safety in a timely manner. Can you achieve the desired outcomes without an operational role? And Dave, that question's for you.
Sure, thanks, Mike. I've got a couple of thoughts relating to this question. First, we have a long history of successful collaboration with the private sector to improve the payment system, and there are many specific things we can point to in the past.
where we've served as this leader catalyst role related to ACH and check and wire transfer. And of course, in the past, it's just natural that we have focused more heavily on the improving the payment systems that we operate, but we have engaged in standards and policy efforts that are broader than just the services that we offer. My second point is, having said all that, I think the questioner is getting at a key issue, and that is, we really are trying through this paper to drive significant improvements in the payment system through industry collaboration and not through our operator role. And this is a little bit of new ground for us. We think this is an ambitious endeavor, but the support we've received to date suggests that moving the payment system forward in the areas that we've identified in the paper can be done without the Fed expanding its operator role. Now, if over time the private sector isn't able to, for example, provide a ubiquitous and convenient faster payment service, one of our strategies, then the Fed can always step back and reassess our operator role following the long-standing principles related to us making a decision, to do so. But I think, the expectation is at least going into this, we expect and believe the private sector will work with us and be able to achieve the desired outcomes without us having to expand our operator role.
All right, very good. Thank you for the question and that answer. The next question is also for Dave, and it says, in taking a wait-and-see approach to near real-time payments, will ubiquity suffer as the Fed General offers services to smaller FIs?
So I think the questioner, when he or she is using the term wait-and-see approach, I think they are thinking about our operator role, because one could infer that we are waiting to see if the private sector is going to do something, and if not, well, then we may have to reassess. But I would also say that we're not taking a wait-and-see approach as it comes to being a leader catalyst. We have a sense of urgency to stand up our faster payments task force. It's going to be very inclusive and bring a lot of diverse perspectives to the table, and the goal there is to develop a plan or plans for the best way to implement faster payments in this country. One would hope that in that planning, ubiquity would be a key element of anything that would come forward. But again, at the end of the day, if after all the work is done and we don't end up having a ubiquitous faster payment system, then I think we have to go back and strategize on how we might achieve that outcome.
All right, excellent. Thank you for that. So the next question is for Sean, and it says, does the Fed think that the not just same-day ACH plan and the clearinghouse real-time payment plans are good ideas?
Thanks for the question, and from our perspective, we're pleased to see the initiatives underway by both NACHA and the clearinghouse. First, on the clearinghouse work effort, I think they were good partners with us, as many other industry stakeholders were when we did this faster assessment last year, and as we've been doing all this dialogue about desired outcomes and strategies and all of that. And I think their effort was greatly informed with the work that we were helping to lead here and their participation in SAME. So it's their work effort, while accounts appears to be working towards a faster payment capability, which is our desired outcome. So, of course, we're excited about that development. ACH, on the other hand, the NACHA folks are taking another run at the same-day capability. We, again, think there are many use cases that would benefit from a same-day ACH capability. We don't believe that all the cases we were evaluating in the faster assessment necessarily would be covered under that proposal, because the speed requirements of those use cases require more real-time payment capability versus the batch same-day kind of capability that the NACHA folks are working on. So we're supportive of both efforts. I think they both advance on the overall desired outcome of a faster, ubiquitous, safe payment system, and are supportive of both.
All right, thank you for that. Heading back to Dave, and this question says, some folks have expressed disappointment that the Fed seems to be moving too slowly on the faster payment initiative, given what they see as a pressing need in the U.S. market and progress already made overseas. How would you respond to that criticism?
Well, first, I can tell you that we are heartened that there is such a strong interest in moving the ball forward on faster payments. We view that as a very good sign, and we understand that some may view our strategy to work with stakeholders to develop, a plan or plans for the best way to do that. Some may view that as being a little bit too slow, but there are a couple of reasons for that strategy. One is, most payment system improvements that have achieved wide adoption have generally required a consensus-driven approach to accommodate, just the numerous parties in the payments ecosystem in this country. And secondly, and candidly, the Fed doesn't have the authority to mandate any kind of faster payment system. And so we think our approach of working with stakeholders to develop the best plans and then allowing the private sector to act on those plans is the best path forward. It will feel a little deliberate, and we'll have to be a little patient, but we think it will produce good outcomes. And we do have a sense of urgency, even though we realize it's going to take some time. We do have a sense of urgency to get our task force stood up and get the ball rolling to develop these best plans.
All right, very good. So again, I appreciate the questions and the answers there. The next one is for Sean. It says, is it possible that the new Fed payment system will disintermediate existing operators and networks?
Let me first clarify the question, and that being the Federal Reserve in our paper, we're not proposing a quote-unquote new Fed payment system. What we're proposing is a task force to work on approaches for that new system or systems. So it's not a Fed system. We're going to try to lead and catalyze the conversation with a broad array of stakeholders to determine what could be and should be our focus, meaning collective stakeholders' focus on faster payment capabilities. And we don't expect, and when you think about, all right, let's assume that the task force does its work, the clearinghouse does its work, and others are working on faster payments capabilities. The goal isn't to eliminate or disintermediate current operators or networks or anything like that. We in our faster payment assessment, we determined that a number of use cases would benefit from faster payment capabilities, and that a number of payments would perhaps migrate from current payment rails like check or ACH or wire or current cash to new payments capability, but it wouldn't eliminate the need for those other payment rails, so to speak. So we don't anticipate, the work we've done thus far in research and the like would suggest that we're going to eliminate any payment systems here, but a lot of work needs to be done to determine what we're actually going to be working on in this country.
All right, very good. Next question is for Dave. It says, does the Fed support the view that all stakeholders have an equal vote in determining how security enhancements are accomplished?
Well, I think the question is getting at the level of inclusiveness in the Fed's work related to payment security. Inclusivity is one of the key tenets of standing up our two task forces, one on faster payments, one on payment security. We do want to ensure both task forces include very diverse participants from all different areas of the payments ecosystem. So, I would say that is something that's very important to us on the front end of getting this work done. All interested stakeholders should and will be allowed to participate and express their views on all of the work that we're doing.
Okay, very good. The next question is back to Sean, and it says, the initial recap of the responses to the consultation paper seemed to focus strongly on the development of a real-time payments network. Would you characterize that conclusion as one that was derived from a predominance of the respondents' comments, or was that derived more from an internal perspective of the Federal Reserve staff or the consulting firm?
I would say that was clearly the former. The respondents' comments, the industry discussion beyond the consultation paper and all of the forums that we've conducted, the faster payment assessment we did, and evidence of those outcomes, obviously, with the clearinghouse announcement that their intent to build a faster payments capability and making that commitment very openly, all I think is evidence that the driver here is payment system stakeholders, not the Federal Reserve, saying this is what we should do. I'll also note that in a number of countries around the world, I think there's 25 or 26 countries that have a faster payments capability. There's probably another 14 to 15 that have a roadmap to build or implement a faster payments capability in those countries. So when you look outside the four walls of the, if you will, of the United States, the world is moving in this direction, and I think many of the U.S. payment stakeholders are saying it's time for us too, as well.
Very good. So, Dave, back to you. In Appendix 6, the paper discusses 4 options, but those options are not explicitly discussed in the main part of the paper. Is the Fed going to work with the industry to review all of these options, or is your recommendation to focus on just one of those options?
It's a great question. We're viewing the task force as a starting point to use the research that we conducted as a starting point for the more detailed work that it will do. In the Appendix 6, it does note that we actually started with 9 different ideas for how to implement faster payments in this country, and then we narrowed it down to 4 after doing some work with the consultant that we use after talking to various industry stakeholders. But we are not putting a fence around the task force such that they can only look at those 9 or those 4. We hope that the research we did was helpful and can be used as a starting point, and the task force may decide to bore into those 4. They may decide to dig into a handful of the 4, or they may decide to look at some other things that we didn't consider in our work. So we want to open the task force proceedings with getting a sense of where the group wants to go and where their time is best spent.
All right, very good. Thank you for that. Sticking with Dave, what changes do you feel we need to make to Fed policy and the regulatory environment to support a multi-operator beyond Fed and TCH payment system in support of faster payments and to maintain a safe and secure payment system?
Well, actually, in the paper, if you look at Strategy 2 and some of the things that we were going to ask the task force, the Faster Payments Task Force, to do, one of the specific bullets in that description hits exactly on this issue. That actually the paper says examine policy issues associated with a possible multi-provider environment, such as the framework for establishing rules and presumably other things. And so we do understand that is something that needs to be assessed. That is something we'll work with the task force on. I would just note that, again, going into this, the Fed has no predisposition on, once faster payments hopefully is actually implemented in this country, whether it be one operator, multi-operators, a whole bunch of operators. That is something that left to be determined. I do think, though, that if we end up in a multi-operator environment, we really have to ensure that we have both ubiquity and interoperability, so that whatever we end up with is efficient from a societal perspective.
All right, thank you for that. Sean, if the NACHA voting membership does approve the current same-day ACH proposal or something very similar, how do you see the volumes that are anticipated to be migrated to same-day ACH affecting the 5 business cases being mentioned in the strategies report, and thus the remaining volume for any new faster payment system?
Thanks for the question. I think I touched on this a smidge when we were going through the overview of the paper, but in general, we don't believe any of the 5 use cases we identified in our faster payments assessment would benefit from a same-day ACH capability. We think that there's the need for real-time authorization, clearing, availability, and/or settlement of those particular use cases. So the same-day ACH capability being contemplated by NACHA really doesn't address those needs. So we would believe that those 29 billion or so payments on an annual basis wouldn't move to a same-day ACH capability. It would still need a faster payments capability.
Okay, thank you for that. Sean, sticking with you, in order to have faster payments, you must use digital signatures for authentication and authorization. I've talked to a number of banks, and none of them are interested in deploying digital signatures for authentication or authorization. Do you know of any banks that are interested in using such technology today?
I don't personally know of any banks that way, and I'm sure some folks that have been doing the work on this, Barb Pacheco and who led our payment security landscape study, might have some insights on that. But from our standpoint, we think this is a great area of standardization or discussion of standards that we would hope that our payment security task force might take up and start to drive the dialogue on for the sake of some consistency in the industry and how we would go about issues like authentication and authorization. Maybe there is a standard way to do that that would be more efficient and effective for users of the payment system. So I think that's a perfect example of one of the items this new payment security task force should tackle and will tackle.
Okay, thank you for that question and that answer. Dave, there is mention of the Fed needing to recover its costs. How would you respond to private sector faster payments initiative that includes cost recovery?
So we understand that private sector firms must assess the business case for making investments in faster payments, including traditional measures of return on investment and/or the long-term strategic rationale for making the changes they need to make to their systems. We expect the economics of implementing faster payments to be a question that is considered by the faster payments task force as they talk about various approaches to faster payments in this country. And as part of that effort, we, the Fed, would carefully study any proposed economic or compensation model associated with faster payments through a public policy lens and risk lens and operational perspectives prior to us opining on any specific model that was chosen.
Okay, very good. Dave, will the business case criteria be measured against the present business case for credit and debit card issuers, or will be measured against the criteria which applies to most other bank services?
So as I mentioned, this business case issue, this economics issue, is something that's going to need to be assessed by the Faster Payments Task Force. But I think it's clear that there is momentum in this country for faster payments. Some recent developments such as the clearinghouse and a number of other private sector initiatives that are in the faster payment realm suggest that these firms believe there is either a business case, traditional ROI case, or that there's some long-term strategic benefit of doing so. So I think, until you get a little bit further down the road and start, kind of coalescing around more specific plans for faster payments, only then can you kind of really assess the business case and the strategic value, long-term strategic value of the various approaches that might be considered.
Very good. Thank you for that. And so I do show about 5 minutes before the scheduled end of this call. We do have a bunch of questions left, so we may go beyond just a few minutes. So we're going to jump into the next one here, and this is for Sean. When will the FFIEC require the banks to fully educate their merchants on the risk involved in payment transmission, as well as the tools they should employ to reduce that risk?
Well, I'd love to be able to speak for the FFIEC, but I can't do so. And so I really can't address what plans they have in that regard. But certainly it's kind of back to the point of this payment security task force that we envision standing up. We think there will be some issues in that realm as well that the task force can and should have a look at, and we expect and hope that once we constitute that task force, that issues like that can be vetted, they can be sent along to the right organizations to be dealt with, or if the task force believes there's not enough momentum in whatever other space to have some of these issues dealt with, would perhaps take that on as a task force initiative. So we would look to the task force to help us with issues like this.
All right, very good. And Sean, this next one's a little lengthy, so bear with me here. It is exciting to read that the Federal Reserve is willing to contribute significantly to the directory ubiquity envisioned in Strategy 4. The creation and secure access to directories has been a desired outcome for several applications, yet identifying a trusted and secure provider is certainly an obstacle. Can you expand your thoughts on this capability? In particular, I am assuming that they might include support for credit push transactions in a manner in which the receiver will not disclose or potentially compromise their true account number.
Yeah, so I think in this space we're very interested in, we're not constituting a task force relative to the directory services, but we do have on our financial services product side, we've been doing a lot of engagement with industry stakeholders, exploring directory service capability and what we could perhaps do in that space. So there's active, let's call it product development work going on with stakeholders that participate with us as a service provider for them. So I think those efforts will continue, and as we think about this faster payments capability, a lot of the input we've received relative to the credit push versus debit pull part of that question, our sense from all of the industry engagement and feedback is that generally speaking, people are more excited about a credit push capability than they are the debit pull. There's just so much more complicating factors in a debit pull capability where you're running into a lot of fraud issues there that you wouldn't simply have with the credit push capability, where you're able to verify the account holder, you're able to verify the account holder's authorizing a push of the credit, and so you just have a lot less risk associated with that. So that seems to be carrying the day with the industry feedback on credit push versus debit pull. Not that we would never consider a debit pull capability in a real-time payment system, but certainly credit push would be the area to start.
All right, very good. Thank you for that. And Dave, this one's for you. What is your targeted timeline to have all of the solutions live?
So I would encourage folks on the call and stakeholders in general to think of this effort as a multi-year effort that will have milestones and wins, if you will, kind of along the way. I think there will be some improvements made in the shorter term, and particularly if you look at our Strategy 5, where we've got some things we want to do to our own businesses, such as our enhancements to National Settlement Service, hopefully the approval of the same-day ACH proposal. All of those, those are going to take place over the next couple of years. So those will be more shorter term. Clearly, things like faster payments are going to take a little longer because it's going to take some time to develop, these plans we're talking about for the best approaches, and then it's going to take some time for private sector firms to work on, specific proposals that they want to implement. So that may be, more medium term. The timeline for payment security is like forever, because I'm not sure we're ever going to say we're done on that. There will be, hopefully a series of improvements all along the way. That's going to be more of a journey-like thing as opposed to a destination. So, I would encourage listeners to think of this as, a multi-year effort with improvements along the way, as opposed to one date out on the calendar where all of this is going to be done. And we all know that even as we're working on all this stuff, the payment system is going to continue to evolve and take shape. And so just because we have these strategies right now doesn't mean in 3 years we may, add another series of strategies that address things that have come up, since the time we've written this paper.
All right, thank you for that. And as you can see, we're just past the hour, but we are going to push on with just a few more questions here, so bear with us. Sean, the Federal Reserve is planning to form task forces on at least 2 payments issues, faster payments and security. It'll be important for smaller community-based institutions to be included on these groups. Will the Fed Reserve places on these task forces for credit unions, and will there be selection criteria? What will that selection criteria be? And then the follow-on to that, you mentioned that the task force participation, how much time do you expect each participant to set aside? Over what length of time would the participation be needed?
Yeah, so on the selection criteria question, we're very, very committed to, in many ways, perhaps not even having a selection criteria in terms of our task force, standing up those task forces, in that we want to have broad participation from all stakeholders, segments, if you will. Credit unions would be very important in all of that. There are thousands of credit unions in the United States. They need to be represented on a task force like this for both faster and security. So we would hope to have that kind of representation from small banks, from medium-sized banks, large banks, technology companies, non-bank providers, network providers. So we'd like to have a broad array of stakeholders participating on these task forces, and we'll ensure that anyone that wants to participate will get a shot here. So we're going to be very, very broadly inclusive in that regard. Regarding the time commitment, we're still noodling what this might look like. We would expect that initially there'll be at least it could be as frequent a meeting time as every 6 weeks to 2 months, where we would actually pull people together either on telephone calls or face-to-face meetings, where we would be drilling down on laying out the work efforts. We would be needing to decide on what type of work groups we'd want to stand up to drill down further on particular issues in both of those spaces. So that kind of work could be even a more intense commitment by task force members if you participate on a work group. But the idea here is we do want people that will show up to the task force and be willing to roll up their sleeves and do work. It's not going to be everyone show up to listen to presentations. Many folks will be charged with developing presentations and a lot of work to bring those to the table. So kind of ill-defined now in terms of the actual commitment until the task force gets together and decides exactly how they're going to go about their work. And so that'll be defined further as we get into the actual first task force meeting.
All right, thank you. And we are going to take just one last question. There are some that we did not get to right now, but we will get answers to you after the session is over. So, again, thank you for that. Dave, this question is for you. Why should an institution participate and not wait and see for the outcome?
Well, I think that is a question that each payment stakeholder has to answer. I think the benefits of participating in our various efforts are that you have a voice at the table. You'll be very in the know about where things may be headed. And also keep in mind, and again, we'll make this more fulsomely public shortly, but there are different levels of participation. You don't just have to be on a task force. We are going to have some kind of Fed payments community where there will be information posted, and you can respond, and you can have access to information. Then there, of course, there's the task force where there is going to be more time you would have to spend. But we'll also have various events like we always do, where we'll be reaching out separately to talk about various issues. And so there are different levels of participation that every organization can decide if they want to be involved in, or you can stand back a little bit and kind of wait to see how this plays out, over the next 18 months or 2 years.
All right, thank you. And let me just do one quick check, see if you have any final comments. Dave, Sean?
Yeah, Mike, thanks. I think I'll just wrap it up by first thanking everybody for participating in the call today. We hope you found it informative, and we really do appreciate your questions. There are very good questions submitted, and kind of on the same theme that I was just talking about, we do encourage you to participate in our various efforts. While this paper is the culmination of 18 months of work, and to a certain extent, those of us working on it, there's a little bit of a sigh of relief that we got it out the door. We are now equally excited about getting the ball rolling on these various strategies and tactics, and hope that we see a lot of you at our various events, and so we can work together to improve the payment system over the next several years. So I think, Mike, with that, we can wrap it up.
All right. Sounds good. Thanks again for joining us today. You may have seen a survey pop up on your screen if you join us through the webinar. Please do take just 60 seconds to fill that out. We really do appreciate the feedback. The same survey is going to be sent to you via email. You only need to fill it out in one place, but again, we really do appreciate that feedback. I want to thank Dave and Sean for their time, and as a quick reminder, we're going to have the same topic covered in a session on February 10th. You probably saw that in communications. Feel free to register for that if you'd like to listen to this message again, maybe ask some other questions that come up. But either way, have a great day, and we will talk to you next time. Thank you.